Hello, I'm Dominic Hobson, co-founder of The Future of Finance. My guest today is Joseph Weinberg, the co-founder of Shyft Network, the blockchain-based trust network that focuses on identity. Passionate about advancing the mass adoption of crypto assets and blockchain, Joseph has developed strong views on how the blockchain industry should be regulated. He was formerly an advisor to the OECD and the Financial Stability Board, as well as to governments and regulated bodies around the world. Joseph, thanks for joining us.
Thanks so much for having me, Dominic. Pleasure to be here.
As I indicated a moment ago, your stated mission for a while now has been to bring cryptocurrency and decentralized finance, DeFi, into the regulated arena. When, I mean, it's become quite a popular idea now, but when did you start thinking that way, and why did you think that way?
Yeah, so I've been in the digital asset ecosystem since late 2010, way before DeFi existed. And I was a very early Bitcoin miner when the only thing there was Bitcoin. And then, of course, Ethereum came along and the story unfolds from there. And I'd say into early 2016, what we had recognized was that we needed to look at these like regulatory layers in a more, serious fashion. And it was really about like, how do you accelerate or accelerate the advancement of the ecosystem? Because there's a threshold between, where the ecosystem is today and where the bridge needs to be kind of, gapped, if you will, in order to make that possible. So the idea started in, I'd say, late 2016. And have kind of progressed as the industry has kind of developed, over the last 5, 6, 7 years. So it's been a pretty early topic. The question has just been like, at what point in stage do things like DeFi become relevant specifically versus centralized, finance exchanges and so on and so forth.
Well, I'll come back to that point about centralized exchanges, but just in terms of developing the ecosystem, as you put it, how important to your thinking at that relatively early stage was attracting institutional money as opposed to retail money?
It's a really good question. We've always kind of tried to approach it as institutional. I think over like the last 8 years, we've always talked about like the day the institutions will come, and it's always been kind of a narrative. I do think it's been critical though. And I think that it's important not because of the money that it brings, although it does bring us, orders of magnitude larger scale into markets like the DeFi market or just Bitcoin or Ethereum in general. But it's more about like, how do you provide and allow institutions to give more access to a wider group, retail as well, right? Because they are really the gatekeepers. The financial institutions control the majority of the savings accounts and checkings accounts and investment products that people use today. So getting this right is, I think, the most important thing to the mass adoption question, which everyone's kind of looking at and trying to figure out.
You mentioned centralized finance a minute ago. We talk a lot these days about convergence between DeFi and CeFi. Now, can we have all the benefits of DeFi with all the regulatory protections of CeFi? In other words, can we have our cake and eat it? I noticed that Binance had come up with this term CDFi to depict the convergence. Is that an exotic animal designed by a committee, or is it actually possible? Can we have our cake and eat it? Yeah.
Yeah, I mean, I think that's something that we've been working pretty heavily on, and it's something that one of the product teams that are working on Shyft should, be releasing some things later this year, early next year, to try to actually answer that question. But I think we can get most of the benefits, and I think like the question becomes, what are the benefits, right? The most important things, I think, in the context of DeFi, what make it interesting are, of course, open, coordination, the ability for anyone to come in, anyone to deposit assets, anyone to kind of share in this, financial system based on smart contracts in the case of DeFi specifically. But it's also really what a concept called composability, right? This idea that assets are composable. It's what allows for things like flash loans and the ability for liquidity to move so quickly around these different kind of, new financial systems, if you will call them that. And I think that's very, very powerful. And the question is, can we enable that? The answer, I think, is yes. The reality is that we might have a little bit more checks and balances in terms of identifying who are the users and who are the counterparties involved. And in that sense, we do lose a little bit. But I do think we can maintain most of the privacy advantages as well. It's just a bit of a more controlled space. But I would also say, Dominic, that like it's not like it's okay to have two different worlds, right? Like we do not have to sacrifice the world that is fully open, fully pseudo-anonymous for a fully regulated one. You know, there is a way to kind of make these two worlds, I think, coexist. And the question is just, can we enable the coexistence and the enablement of the other one quick enough before regulators kind of come at the permissionless one entirely? That's more of, I think, the regulatory question today.
Well, flash loans, which you mentioned, are quite a good example of an idea, a successful experiment, which has led to some issues in the industry. And whether or not regulation could fix that, I'm sure that institutional money in particular would be encouraged if they felt that innovations of that kind were regulated in some way. So I'm thinking here that if, you know, when we think about the convergence, kind of bringing cryptocurrency and DeFi inside this regulatory perimeter, and it looks like cryptocurrency and DeFi are going to come inside the perimeter now over the next few years. Tokens are already there. They're kind of regulated by existing securities laws in most of the major markets. So is the future that you imagine going to be one in which cryptocurrency and DeFi start to get regulated by the existing laws and regulations, or are we going to have to start creating new laws and new regulations? And I ask you that question in the knowledge that here in the UK, for example, it's become obvious that if we are to create an infrastructure in which cryptocurrency and DeFi tokens can be transferred successfully between wallets on a blockchain network, there is actually going to have to be a change in primary law. They've already done that in some jurisdictions like Luxembourg. But if you look on a global scale, do you think that is always going to be a necessity, or can existing regulations accommodate what's going on in cryptocurrency and DeFi?
I think that parts of it can. So, you know, the first regulations that we actually wrote in the world that I kind of helped co-author were in Bermuda. And this was back in 2018. And what our goal was to try to figure out, could we do just that? Could we take, you know, a framework of common law, or Commonwealth law rather, which, you know, circulates in many countries in the world today, like the UK and Canada here. And can we effectively piggyback off of the way that their existing regulatory frameworks work, but actually build regulations towards how the industry functions and how it operates today. And I think that the only way forward is effectively to do that in similar models, because, you know, the old Steve Jobs saying, or someone before him, you can't, you know, fit a square peg in a round hole. I think that does apply, and regulators are not only aware of that today, but they feel that incredibly so. It's a situation where it's not even so much the laws that they put in place. It's the reality that the regulations almost need to be digitized, or they need to be almost, you know, smart contract enabled in some way in order for them to get a handle on this. And I think the last piece is that because everything is so globally distributed, there is no jurisdiction. In a world where jurisdiction doesn't exist, like on the internet, how do you have jurisdictional law, right? So I do think that like new formulations and new structures need to be created. You know, short of that, at the very least, jurisdictions themselves can implement, you know, extensions and expansions and reinventions of what they have today and what they've created so far, right? But I do think that, you know, rapid transformation just helps the overall societal advancement, if you will.
Now, when regulators look at cryptocurrency and DeFi, the first thing which seems to cross their mind is that there's a long, and it doesn't seem to be getting any better, history of various financial crimes and scams, defalcations of various sorts, each of which has its own peculiarities. It's very difficult to get accurate price information to feed oracles. It's very difficult to work out what some of these tokens are trying to do. Even from the industry has made progress, but it's still quite difficult to work out what a particular token is aiming to do and how to get a price for it. And then lastly, you've got these governance issues with these DAOs, which seem very susceptible to being taken over by a small group of insiders, if you like. So regulators are facing a whole host of unfamiliar issues, and they must be in a very difficult position trying to balance, letting innovation go on, but also trying to protect consumers. What would your advice be as to how to make cryptocurrency and DeFi compliant? What is it going to look like, that compliant DeFi cryptocurrency industry?
Yeah, it's a great question. I mean, I also, I think, grew up in the part of the industry, when I was first entering crypto, it would be like, if this is the wild, wild west, then that was like, the chaotic, something beyond that, I think, in many respects. And so I kind of look at this and always have viewed it as creative destruction. It is a cyclical advancement, right? Like, we learn from the mistakes that we make. We may repeat them in certain aspects, in certain functions, in certain ways. But the reality is that the outcomes every, 1 to 2 years, or 1 to 2 kind of development or technology cycles, ends up becoming that the lessons of the past are reinforced in the infrastructure that's developed in this industry. And I think that's a very, very important kind of feedback loop. It's kind of like almost like a virus, right? It's kind of constantly looking and figuring out how to multiply, but also at the same time how to like become better and stronger. And I mean that in a good sense, of course, in the case of this discussion. And so like, I think that, as we learn from the mistakes that are happening, listen, there's always going to be bad people. There's bad people in traditional financial markets, bad people, tools don't hurt people, people hurt people. Let's put it that way. Right. And I don't think it's the technology's fault. It's how you use it. Right. And use of something is very hard to regulate, I think, or how it is used in an open environment. But I think, like, to get right to the point, is that, we can put in pseudo open safeguards to prevent things like this. And I think that's kind of where the industry is going. Like, we can have open compliance layers and open compliance frameworks that do coexist in all of these smart contract systems. And I think that's like a very important concept, is like, we can opt into compliance in a world where we choose to as users. And we can also do that in a way that is pretty much a non-friction filled experience, like the traditional world might be today. And so I think that, like, as you start developing these infrastructures and deploying them and allowing the industry to, again, kind of go through that metamorphosis phase with this new type of infrastructure, regulation becomes a fabric inside of, this wider kind of, cosmos of new experiences and new technologies broadly. But I do think it will happen. I think it's inevitable. I think most founders recognize it today. The question for developers and founders today is just, how do we do it? Like, we are just as confused as regulators. I think that's the answer most technologists would say.
We forget, of course, that the traditional financial services industry is also full of bad people and doesn't have a particularly strong track record in keeping them out of its systems. You say there are bad people everywhere. Do you think, it prompts a question in my mind, this observation you made, do you think that the ability of the cryptocurrency DeFi industries to iterate their way to better and better solutions to the problems they encounter day to day means that actually it could potentially be more successful at excluding bad people in the long run than the traditional system?
I think that by nature it kind of has to, right? Like, I kind of look at it as like, kind of like, a virus and an antivirus, right? It's kind of like, the antibodies continuously attack, and, we kind of look and we watch this kind of organism constantly adapt to its environment, but at the same time, we're also watching its improvement, right? Over time, that improvement cycle continues to do things like optimize to eliminate bad actors, hack capabilities, ways in which people even find and identify these types of projects that may end up hurting consumers. I think it's just like the nature of these types of open source systems and markets is that, yes, in fact, that's the case. I think, again, there will always be people finding new ways to, exploit things and extract value from people in nefarious ways. But but I do think that we can build safeguards a lot faster, right? And I think that even over the last 1 or 2 years, these markets have kind of proven that they can be self-sufficient without the need for, regulatory intervention to the point where, we have to stop a market like a DeFi exchange or something like that. And I think that's very powerful, right? To say that these systems can actually self-operate and self-function. The more things we build around them, of course, the more capabilities they have, the better they become for users. But it's still the first inning in a much longer technology trajectory.
So if we're agreed that cryptocurrency and DeFi are on this long march inside the regulatory perimeter in multiple jurisdictions around the world, what does that mean for Shyft as opposed to what it means for regulators? What's the opportunity for you?
Yeah, I mean, we've kind of looked at it as like, we were very early adopters in the ecosystem. And what we kind of recognized early on, as I had mentioned, is like, no one is looking at regulations, right? And this was at a time where no one could really even speak the word regulations very well. I think that we kind of tried to build for the 10-year vision and far into the future. And our roadmap, I think, kind of reflects that, right? It's like, we know that there will come this time where centralized entities will be regulated. Travel rule will become that place where the most complexity occurs, and that's where we've kind of focused in one team that's working on top of the Shyft protocol. As we kind of look into the next kind of phases, what does DeFi look like? What do NFTs look like? What does the concept of a source of funds requirement look like in the world where, money is flying all over these blockchains and protocols? Because in the banking system, the ability to prove who is the source of funds is actually the key question in compliance. And that leads to sanctions and everything else. So Shyft kind of plays this role where, we've, focused on, development teams focusing on a few of these core areas. We wish that there were more people building in this regulatory, segment. We kind of seem to be the lone rangers in most cases, at least at the level in which these teams are developing today across Shyft. But that's okay. Could be worse. But we do really see this world where, the end state is one where, we do not bifurcate parts of the industry. So all of this ecosystem remains open. We have these kind of regulatory and compliance layers that operate across all systems, all protocols, all different contracts, all different centralized entities, you name it. And we have this kind of identity and kind of compliance enforcement layer that really kind of almost acts as regulation as a protocol, but does so in a way that's, very much in tune with how the ecosystem works. I think that's kind of the end state for where Shyft is this kind of complementary layer for everyone. So that's what we're building towards, at least.
One of the things that strikes me when I look at how traditional financial services are regulated is that it's a very complex accretion of different rules and laws and regulations over very long periods of time. And when you start to try and analyze what the objectives were, whether those objectives are being achieved now, you start to ask yourself questions like, well, what are they trying to regulate here? Is it the entity issuing this security? Is it the entity trading this security? Is it the security itself? Is it the investors? Who is it? Is it the distributors? So you end up with a complex and slightly dysfunctional network of rules and regulations, which don't always interact very successfully, which probably helps to account for why regulation isn't always very effective, even in the traditional thing. Can those sort of, are there principles, rules of thumb, if you like it's always better to regulate an issuer, it's always better to regulate an instrument, it's always better to regulate the people in the market? Are there rules of thumb that you can bring to advising governments that you're talking to about how to go about this, just first principles, if you like?
Yeah, I mean, we do actively advise several on an independent kind of capacity, and more from just an education perspective. But I think like the core principles that we'd really try to get across, and it depends on the area, right? These are very different. The travel rule is very different from DeFi and tokenization and NFTs and so on and so forth. So it really depends where it is. But I think the reality is, as most regulators know, in most circumstances, other than a governance one that we're seeing in the United States today, is that like it has to be on the issuer. And yes, the question then becomes, who is the issuer, right? In the context of a DeFi DAO or a DEX, like that's not very clear. but regulated intermediaries are what the FATF and these these AML and CFT bodies are designed for. I don't think you can depart from that. I don't think that you can start, going after and regulating individuals that way. I think that becomes very hard. I think in some cases you can look at common enterprise and say, okay, everyone here in a DAO may be working as, an unstructured common enterprise. That's something that the United States has kind of tried to approach DAOs with lately. In that case, I think that it's like, have legal protections in place. Like even DAOs, whether you're foundations, whether you're DAOs, if you're DeFi, like it's always good to still, put in legal safeguards. Like that's just what you should do, I think, as a participant, no matter who you are. And I think like regulators really need to start looking at the question around like, who do we approach and who do we not? And also towards new technologies. I think that they're at a breaking point today where they're realizing that in order for regulations to work, there needs to be supplementary regulatory technology to actually make them work. Enforcement is almost impossible otherwise. And so I think that's really where like the shift will, no pun intended, will start to come, is in this realization that like regulators need to be backed up with technologies that can make the regulation successful. So don't be shy to looking at partnering in new ways of using technologies to your advantage. I think that's the point.
Just to be clear, you're talking there about reg tech and soup tech. You're not talking about regulating technology, right?
No, I'm not talking about regulation. Okay. Yes,
yeah,
reg tech, smart contracts and other types of things. I'm saying from the ecosystem, I think that they need to start looking at how do we put regulation into the world in which they're trying to regulate. That's kind of what I'm referring to.
I want to talk about digital identity in a minute. Before I do, just one last question on crypto and DeFi. Both those markets have undergone a sharp re-rating since the autumn of last year. Has that changed anything in the minds of regulators or in your view about the need to regulate these industries?
So when I first saw a Bitcoin market, it was like no market was maybe 6 cents, then it went to $30, and then it crashed down, to about maybe $1. Then it went up to $200, then down to $80, then up. These are cyclical. This is the first inning, and I think regulators are. I think Bitcoin and Ethereum have taught regulators one thing, which is this never goes away. And so although values might be suppressed and we're going through this next kind of innovation development cycle, the things that come out of the next kind of, bull market, if you want to call it that, the innovation that's built today will be at least a 1 to 5, 10 order magnitude, sizable difference. And every regulator that we speak with today is of that belief. So I don't think there's a question today that, the size of DeFi makes a difference in opinion. It's here to stay, just like everything else before it. And we got to figure this out pretty quickly. Okay.
So no regulator is, in your experience, is saying, well, this will all be gone in 2 or 3 years' time, so let's not waste time on how to regulate it.
Absolutely not. I think they would be foolish to do so. And I think that, every regulator is also a person. They're also an enthusiast. It's also interesting and exciting for, pretty much everyone once you really start to understand it. So people are, should be and are excited about the future of technology. So, yeah.
Okay, let's talk about digital identity. This obviously has a deep connection to regulation, but establishing digital identity has been for a while now pretty crucial to your vision of the future. When did you work out that digital identity matters? I asked that because I came to that conclusion myself a bit late in the day. When did you first think it was a crucial part of the answer?
So we've always kind of looked I think, early on in Bitcoin, like the idea that I have an account or I have this public key, like that is a form of my identity, right? It is like a way to verify that it is myself. And I think that's always kind of been the way that I've viewed it since the very early days. I think when it really became this realization is probably into like 2014 into 16, in that range where we realized that, compliance was getting very, very complicated because there was no regulation. And the best way to solve this, if you look to the future of how decentralized systems might evolve, this identity component would actually unlock pretty much everything. It would solve so many problems in the traditional world as well as the digital world, that it is the end all be all. The question is, can you do it in a privacy preserving way, or are you enabling governments to have more control than you might want, right? And so I think there's the balance there, and that's where the fight's always been in my mind. But no, I think it's from the beginning, and that's kind of the reason why we started Shyft, was that we recognize that once we can get identity right, whether that's identity of a business, a government, an institution of any size, any sorts, doesn't matter, public, private, or a user, once you can enable that digitally, you have this form of representation. And that representation now allows us to make smart contracts work, allows for digital payments to work, things like Bitcoin transactions or other types of stablecoin payments. We can start to automate the functions of how the world works, but we need a format of identity. Like, you need a way of establishing record of who everything and everyone is. It's the basis of everything that we do in the world today, right? And so I think that's kind of the concept and how we've looked at it. The question then has always been, I think for the last 10 years, we've noticed that identity systems haven't worked. And the reason is, in our view at least, that identity doesn't work because you need something that's 10 times better than what we have today. The card in my pocket works, unless, of course, you're in a country that has no identity, in which case that's a different story. Then it's about accessibility and, does the internet support people in that part of the world? But in at least the Western world, the question is, like, how do you make a product or service so much better that it's usable from an identity perspective digitally? And I don't think we're quite there yet. I do think regulation is a forcing function. So regulations have a funny way of forcing usage and adoption of certain technologies and certain use cases. And I do think that's where identity ends up, is this kind of forced introduction to society. That's kind of the roadmap that we've taken at Shyft. But yeah, it's always been like a top of mind, I would say. The question is doing it securely and safely for people.
Is that your explanation of why the take-up of digital identity has been so limited so far? Because I think once you get digital identity, you understand how many problems it could solve, not just the problems you've described in the cryptocurrency and DeFi industries, but actually many of the problems which I take the FATF recommendations on money laundering and countering the financing of terrorism, hundreds of billions of dollars being spent by financial institutions all over the planet. Digital identity could fix that, properly conceived and properly set up and enforced, I guess, by regulations and standards. But is that the problem? It's not good enough yet, our practice of digital identity.
I think it's a question of, it's the practice. First of all, it's the implementation. Governments aren't technology companies. They're not the fastest in the world at implementing most things. That's just the function of how a government works. They're a bit slower. And it's also like, what is the use case that actually people are going to stick to, right? Other than it being a forced requirement, which is the only way that I see it probably realistically working. But yeah, I think that is what it is that it hasn't, and there's a suite of privacy problems that I do think, governments struggle with. And rightfully so, citizens, I think, in this time and age, should be, cautious in those types of systems, right? Don't forget that once identity and digital technologies are embedded in a society, they never leave. So, you might have a great democracy today, but the world changes and it changes quickly. And soon enough, you have someone in power and that it might not be as kind or thoughtful in the way that those technologies are used. And if that's the case, do you really want them in control of an identity system that may or may not be tracking civilians, right? And so there's these kind of moral and fundamental questions, I think, that do come along with it as well. But yeah.
But I'm right to think you can build privacy, you can build anonymity into a digital identity system. In other words, it solves that fundamental problem which you've just said governments are facing. How Correct. Do they balance privacy and identity? Yes, we definitely can. And that's also why I think like the
I think that's kind of why my assumption is that most great technologies, I think over the last 20 years, you look at payment systems, you look at video streaming, you look at a lot of the technologies, they've come from the internet, right? They haven't come from governments enabling them. And I tend to think that, digital currencies are very much in that same capacity, right? And so I have this tendency to believe that identity will come from that as well. It just won't be in the same, it's being organically spun up in the way that video streaming may have been, or payments. It may be more from this regulatory requirements on digital companies or digital technology or digital currency companies to require it to be. So that's kind of just my perspective. But
let's talk a bit about how Shyft goes about doing this. As I understand it, Shyft builds an identity infrastructure. It then writes smart contracts that implement the requirements for a particular identity use case, the term you used. What do you mean by an identity infrastructure? Is it are you building here like an ecosystem of multiple networks, or are you building a single network?
So it's one network. I think it's one blockchain, and it's a series, a very robust set of smart contracts. And those smart contracts were designed to not sit on one blockchain, but were meant to effectively almost sit across multiple in order to network together. So the goal being that you might have something on the Shyft network as a blockchain, you might have those contracts sitting on Ethereum, on Phantom, on all these different protocols. And the goal is really to provide what we call an identity attestation. So this kind of this metadata confirmation, and this metadata transaction, this transaction that occurs on a blockchain today is not financial in nature. It's actually, a set of data, or a packet of data, a packet of information. And that information is acting as almost like a pointer, saying this is the time, this is the source, this is, a pseudo-anonymous kind of registry or indicator of some event that's happened, like someone issuing an ID, like maybe it's, so-and-so's ID. It happens to be Joseph, but that's, of course, privacy preserved. And the goal is to effectively enable that across multiple networks, as I had mentioned, but then also enable use cases that utilize and kind of aggregate these identity formats into many different kind of avenues. So if you think of DeFi and compliance in that domain, or CeFi and compliance in that domain, the ability to kind of network these two vastly kind of different places and kind of industries together would be an example of that kind of meshing or aggregation of identity sources together. So it is really this way of proving things on a network, using a network for coordination more so. It's not like you're putting, Joseph Weinberg on the blockchain as it's immutable, and that's a huge privacy violation. But it's kind of providing the proof and putting the proofs where they need to be that, in fact, an identity has been created, or a travel rule transaction by Binance has been initiated, or a government has, in fact, verified some form of identity, with the identity information being private, right? And so that's kind of the way that, the Shyft architecture and kind of stack is designed today.
So if your identity infrastructure is going to be that flexible, does that mean it has to be open, i.e. anyone can be part of it, can join it? Or is your infrastructure going to be closed? You're going to invite people to join it, or is it going to be some mixture of those two things? In other words, it's open, but you set some sort of membership criteria. Which is it? Is it open? Is it closed? Or is it hybrid?
Yeah, so we have different formats, and we look at this in a few different ways, right? And it's really dependent on the use case, to be honest. In the case of the travel rule, which is more of a decentralized version of Swift, simplest way to kind of put that, you do need a form of onboarding, because you need to verify that Binance is really Binance and not pretending to be Binance. So that would be one example. And so in the case of other more open identity systems, the way that some parts of Shyft were designed were such that they can, if they aren't open, they can actually interact with systems or other versions of Shyft that are open. So you kind of get this kind of symbiosis by way of this might be a closed registry or closed set of information or closed kind of, entity registry or user registry, but it can also interact with this open registry that sits on a different network, for example. So it really depends on kind of what the use case is. But Shyft as a public layer blockchain is an open system. The smart contracts have permissions in some cases and no permissions in others.
Mm-hmm. A term you use is trust anchor. Can you explain to us exactly what you mean by trust anchor?
Yeah, so the concept of a trust anchor is one where you are effectively an entity. And the way that we looked at identity was that it's very, very unlikely that users would, this self-sovereign identity concept, which is one where you as a user hold, host, and store all of your user data. It's a nice idea. I think no one is like that. In most cases, that's just not going to happen. It's not a reality. And so the concept that was designed was this concept of a trust anchor, which is one where we have an institution, let's say it's a bank, maybe it's, I don't know, it's a Google or it's someone else. And they are really these custodians of data, and trust anchors are effectively these custodians of data. And they can be multiple and many and in different shapes, forms, and sizes, regulated, unregulated, depending on the use case. But a trust anchor is there to effectively bind these like attestations. They're there to write the proofs, the events that in fact Joseph has an ID, or that in fact I have verified this user, or I've done some sort of voting system in the case of a government, or a vote has been made. So the idea of a trust anchor is just a way of formulating an entity on a public blockchain, on a smart contract, effectively.
I'm a bit disappointed you've been negative about self-sovereign digital identities, because I think you're saying that you don't think people will want to own and control and consent their own data. They'll want to hand this over to a third party, in this case, like a trust anchor. I always rather like the idea of consumers kind of upending capitalism by owning their data, but I suspect you're right.
Yeah.
I'm not going to do that. So what happens though with these? You've got these new intermediary institutions who are going to be, in effect, controlling the data of the consumer. How's that relationship going to work with the consumer?
Yeah, I mean, I think the reality is like we kind of just looked at this on like a practical level of, who holds our data today? It's not us, right? Mm-hmm. What I do think is, it's not. Yeah. What I do think is important is providing more accessible controls for the user to be able to understand where their data is going, to be able to maybe make more decisions on what happens to that data. And I think that that's the relationship that trust anchors and users end up taking in the long term and, over a 10-year period, unless you're in a regulated, financial institution setting where there's compliance requirements. But I do think that it's really it becomes a world where the institutions that are already holding your data, they're there for convenience, or they're there because they're providing you a service and they need your data. That's fair. You should be able to make it easier to transmit that data between other institutions, other custodians for the services that me as the user are trying to access. But me as the user has more control in saying, yes, bank A, I'm comfortable with you moving my data to, Shopify because it's something that I'm trying to sign up for as a service. That type of, I think, entity to user relationship, I think, continues. I just think that the granularity and the controls that the user has is what it enhances from an experience perspective, if that makes sense, if you will.
So the trust actors have to come up with a better user experience so that it's easy for people to, when they go shopping, in effect, click one button, but when they're applying for a passport or buying an airline ticket, they click it. It needs to be easy for them, right?
Exactly. And it's not, yeah. And it needs to be one where, you do have more control as the user, but it's like, you're not going to just me holding all my data. I don't even know how it would work, and saying, oh, sign up for this airline and somehow move all of my grandma could never do that. And the way that we always try to build technology is to think about, like, could my grandmother figure this out? If not, like, probably not the best thing to build for a wider market, that is, right? So
okay. Now, another thought occurs to me as we're discussing the problems of making digital identity work. Do I understand the Shyft infrastructure correctly? It's a federated model. In other words, you go to the data, you bring, rather than going and fetching the data and bringing it back and then having a look at it, you just kind of go and get what you need when you need it. And that is a better protection for privacy and confidentiality of data. In fact, you don't even need to know who that data pertains to. That's what I think of as a federated model. Is that what the Shyft network is?
So it's a bit different. So there's a few layers of federation. So the public blockchain, you can think of it as, which is kind of like a side chain. It's a modified version of Ethereum. That is what is secured in a system called a federated system. That means that you have a group of nodes. Those nodes are membership driven. So the nodes control the network. They are basically given proposals on, expanding that federation, adding more nodes, or, reducing the federation. And this is an alternative to proof of work or proof of stake. What we found is that when it comes to use cases like identity, there's very, very particular requirements that we have. We need to be able to scale the transaction throughput of a network very quickly, as an example. We need to make sure, as another example, that identities aren't rolled back. There's actually a world where transactions in Ethereum or Bitcoin can actually do what's called like a rollback. So you can actually lose the history in a block reorganization on a blockchain, such that the identity that I created is no longer there, and that's not a very good situation, for an identity. And so Shyft as a public blockchain was designed to solve for these types of attributes, but also maintaining high censorship resistance. And that's the way that we look at decentralization. Is it's not the number of nodes that you have in a network. It's about, is this network resistant to attacks, and is it censorship resistant to someone coming in and trying to overtake the network, change its characteristics, and so on and so forth. And so that's the purpose of that. However, if you think of trust anchors and you think of things like a travel rule use case, all of the exchanges really do become federated insofar as, as long as there's an onboarding process, they can all be added into that system. You need to be able to trust that this exchange is really this exchange, and it's not someone coming in trying to steal data from Binance. So Shyft kind of takes this federation on top of federation system model, where everything is in effect a form of federation. It's just more open in some dimensions, more closed. Some have more governance, some have less. So we've really tried to innovate around this federation model. So it's not only on the identity side, is the point I'm making.
I pick you up on that throughput point, which is a new one on me. I'd kind of assumed, possibly stupidly, that digital identity was always going to work well with blockchain networks. But I think you've just been saying that actually one of the problems the technology presents is if you're going to have a workable digital identity solution, it needs to have high throughput, high speed, high scalability.
Yes.
That is an issue, is it?
Yeah, you want to make sure that the identity that you created is actually there, right? And I think that we have this concept of yes, block reorganizations are real, and they do happen. In the event of a government trying to issue a birth certificate, it's not a very good approach if it's going to accidentally disappear 1 out of every 1,000, right? Or 1 out of every 100, or whatever it might be. And I think that's a real problem. And I think the second thing is identity and the data and that is being attributed to it. It's a lot of interactions, right? You need to be able to scale. And I think it's more of this question of we always try to think from a design and architecture perspective, what are you building for, right? Like Bitcoin and arguably Ethereum, they really try to build this system where as distribution is everything, as decentralized as possible from an open nodes perspective. I can run it on my phone is the goal, and it doesn't compute quickly, but it's this security layer for everyone. In the case when you're looking at like very purpose-based systems like Shyft is focused on identity. So we're looking at solving the problems that adhere to identity-related issues and the governance and data kind of coordination problems that we have. And in that world, we need to look at the exact problem sets. And so Shyft is specifically designed for that. It does also sit inside of Tor, which probably sounds a bit interesting, but again, another design decision is like, how do you mitigate, attacks against the network? So we use things like the Tor network to secure and obfuscate the nodes of Shyft and things like that. So there's a variety of other enhancements.
And the smart contracts that are being written for these particular use cases, who's writing them? Is that you, or the users make it up using components you give them?
No, so the initial core team, Shyft Labs or Shyft Core, they actually initially designed them. That they've been designed over kind of the last 3 or 4 years in kind of different phases and different components. That team is kind of what we look at as like the smart contract team directly. And so they're working on, they finish a certain segment, they issue that out, or they push out that deployment to a certain project team. So maybe the Veriscope travel rule team would utilize a few components of a certain set of smart contracts. But that smart contract team, that kind of labs core team, is there to ensure that those contracts are done properly and safe for users before the application layer and middleware layer and kind of those teams start to kind of build on top of them. That's the case for DeFi as well. So it's a pretty big operation, I would say, at this point.
And is security an issue with the smart contracts?
Yeah, we always are very, very conscious of it. It's kind of one of the reasons that, Shyft is probably one of the slowest deployers, I think, in the space today. We're not one of these teams that says kind of, push things out and like hope it works, move fast, break things. I think that like mantra works in the old Web 2 world, but in this world, you lose money and a lot of it if it's not done properly. So we take kind of like security and audits incredibly seriously, and we're very slow and careful. At least the core teams are that work across it in this area. So security is definitely an issue. But it is less of an issue because these are not all financial asset contracts, right? So if it's a data attribution contract or it's a registry, it's not as big of a worry that someone's going to hack that as, a DeFi pool with $1 billion in assets in it, right? So it's kind of just, you got to think of the trade-offs in security as well.
Mm-hmm. You've mentioned the travel ruler a number of times, and it's a very obvious case for the application of digital identities, which of course have been imposed on the cryptocurrency and DeFi industries, I think October 2018. So we're 4 years on from when this was first set out by the FATF. And I understand you've developed a service, Veriscope, to help the cryptocurrency and DeFi industries accommodate travel. How does that work?
Yeah, so it's an interesting one. So we kind of got a bunch of the exchanges together in 2018 and 2019, and it kind of comprised of probably like 20 to 30 of the largest exchanges globally at that time. So Binance and Bitfinex and Tether and a lot of the global ones, not so much of the US ones. And we actually kind of co-designed the solution. And the goal was to build an open source system, one that would rely on smart contracts, as we've talked about, and kind of open blockchains and kind of this open source ethos to effectively build this kind of federated, decentralized system for effectively carrying out these SWIFT-like transactions. And of course, the travel rule is the requirement for us to move user data, PII, prior to every crypto transaction that occurs between regulated intermediaries, what we call virtual asset service providers, or VASPs. And so really what Shyft does is it acts as this data coordination and discovery layer. And this discovery layer is used by exchanges who are trying to figure out, okay, let's say I'm Binance, my user is about to make a withdrawal of Bitcoin. How do we know who controls the address that I am about to send this Bitcoin to? That's kind of the concept of Swift, is like, Joseph sends payment, where does it go? And we need the user's data and the user's details. And so Shyft kind of takes this coordination role where you write that transaction into the network, it broadcasts that request. This is Binance, we're broadcasting this request. who has information on this address. Maybe it's, I don't know, it's Coinbase or someone else says, hey, that's me, this is Coinbase. And then they respond securely off of Shyft. So outside of the network, they then do this kind of back and forth to move user data. But it's incredibly powerful because like we need a system that is open and not one that is controlled by exchanges, right? Like it's very hard to enter into a system that is going to move the most sensitive data that we have, financial transaction data and PII, cross-jurisdictionally to over 200 countries prior to every transaction this needs to occur. And we need to do this in a way that is fast and that doesn't erode the user experience of crypto. And so it's a very, very complex challenge. And I would say it's probably the hardest technology problem that the industry has ever faced since its existence today. So we've really tried to kind of build for the future of that and try to keep it as open and fair as possible.
Mm-hmm. Now, one of the ways you're progressing is by forming partnerships or alliances with established firms. I understand you've got one in place with a law firm in DLA Piper. You got one in place with a payments service provider, WorldPay. Yep. What are those? How do those relationships work, and what are those two particular instances I've mentioned? What are they going to lead to?
Yeah, so when it comes to onboarding in the network, as you had asked, is it closed or is it open, you had asked. When it comes to you being an exchange, right, it's really important that we understand, is this really Binance? And so someone like a DLA Piper that is, the second or third largest law firm in the world, they have, jurisdiction pretty much everywhere. They're a very, very good, partner to have when it comes to doing attribution or attestation, verifying that this is in fact Binance in, Abu Dhabi or in Canada or wherever. And so the role of DLA Piper is twofold. One, they act as a part of the federation. They run nodes on behalf of the network. The second thing that they do is they provide these attestations to verify and confirm that the identity information of the exchange or the entity is in fact who they say they are. So they're really providing this identification and verification service on top of the public protocol. In the case of WorldPay, it's similar in some respects. So one of the kind of the use cases that we have with WorldPay is, well, they're acting as a federation member as well. So they're running nodes on top of the network to secure and support the network. And then the second thing is what we're doing with them are a few projects that we can't announce yet, but we're working through kind of currently, but they do revolve around the travel rule. We have partnerships with them and a lot of the exchanges that they process payments for. And of course, they're also owned by FIS, which is the, I think, largest, payments and financial services aggregator in the world. And so we're working on a few other kind of projects with the FIS side as well, and trying to understand kind of what the future of, the ecosystem looks like with these big institutions kind of, really entering, and how to kind of work together on that side. So a few other things as well.
In establishing, is this person or this entity who they say they are, have you found legal entity identifiers, these LEIs, of any value?
It's a great question. We're looking more at them. We think that there is a world where they definitely work. Like there's jurisdictions in the world today, for example, that have closed registries. And so if you're in a country or jurisdiction that has a closed registry, it's very hard to know if you're actually regulated there because the information is not public. Mm-hmm. I think LEIs are a very good way of solving that type of corporate identity problem. I think we'll see them more adopted over the next few years. I hope to see them in the travel rule side soon as well, at least in these like certain particular use cases initially. I mean, I think it's a really, really good, useful tool to kind of enabling it. I think we just need more adoption of it, and it needs to be more clearly defined as a standard as it pertains to how it works within the crypto world, I'd say, or the digital asset world specifically. So,
Joseph, one last question for you. As you said at the outset, you've been involved with Bitcoin since, I think, 2010, you said. So you've been at this for more than a decade. You've been in this industry a long time, longer than most of us, and indeed probably most people who are more deeply involved than I am. Are you more optimistic now about blockchain, cryptocurrencies, DeFi, the original vision, if you like, going back more than a decade? Are you more confident that vision will come to fruition now than you were 5-10 years ago?
It's a great question. So I mean, I've always kind of been somewhere in between. I mean, I think there's these very, very, very aggressive proponents who take this position that, you know, everything should be privacy first and anonymization over everything. That was never the camp that I was in. I do believe that like Bitcoin is solving this very important requirement of this kind of like reserve asset function that is free from central, you know, control. I do think Bitcoin actually is, you know, cutting through all the narratives. I do think that it is executing on that. And I think that's a very, very important thing to have for humanity. And I do think that that is working and continues and will continue to work. But I was never shy to the fact that like I'm a technologist. I'm not a Bitcoin only, Bitcoin maximalist. You know, I'm a realist. And so my perspectives have always been that like, you know, Bitcoin is good for these things. Other technologies must be good for other things, right? And that's kind of why we did things like Shyft. You know, we were early adopters in Ethereum. You know, we're from Canada and spent many years in Toronto when kind of the digital asset ecosystem was growing, and we were there kind of when Ethereum was being founded. And we were always big, fans of that as well, because we recognized that like decentralization and what that means is different to different places and use cases, and the more things we can eliminate this centralized intermediary control, I think in some cases the better. So I've always been this of the ideology that like, you know, these systems are good and they need to permeate all different places. I don't think Bitcoin will replace the dollar, though. I don't think that's going to happen. So I will be surprised. I mean, but I have been surprised before. So I don't think Bitcoin will replace the dollar. I think we kind of thought that maybe very early on. I was like 19 at the time, I think, or 20. So, as we grow older, we kind of realize that, you know, maybe not quite that. But I do think the role and its place in the world will be incredibly impactful. And that's happening every day, right? We're seeing that happen. It's just slow. So. Yeah,
I suspect the Federal Reserve is more concerned about the digital yuan replacing the dollar.
I think so. Yeah.
Joseph Weinberg, thanks very much for taking the time to talk to Future of Finance.
Thanks so much for having me, Dominic. Appreciate it. It's always a pleasure.